Now I come to saying what we propose about the banking and the financial sector. Financial gains from cleaning of the banking system are now amply visible. NPAs, meaning non-performing assets, of commercial banks have reduced by over 1 lakh crore over the last year. Record recovery of over 4 lakh crore due to IBC and other measures has been effected in the last 4 years. Provision coverage ratio is now at its highest in 7 years, and domestic credit growth has risen by 13.8%. Government has smoothly carried out consolidation, reducing the number of public sector banks by 8. Government has smoothly carried out consolidation, reducing the number of public sector banks by 8. At the same time, as many as 6 public sector banks have been enabled to come out of prompt corrective action framework. We have enabled 6 public sector banks to come out of that situation. Having addressed the legacy issues, public sector banks are now proposed to be further provided 70,000 crores of rupees capital to boost credit for a strong impetus to the economy. 70,000 crores of rupees will be provided in order that capital will be boosted so that credit can be improved. To further improve ease of living, they will leverage technology, offering online personal loans, doorstep banking, and enabling customers of one public sector bank to access services across all public sector banks and so on. In addition, government will initiate steps to empower account holders to remedy the current situation in which they do not have control over deposits of cash by others into their accounts. There is an issue now. Unknowing to them, there are money being deposited into accounts, and that is creating a lot of problems for customers. So we will be addressing that also. We will initiate steps to address that problem. Reforms will also be undertaken to strengthen governance in public sector banks. Non-banking financial companies are playing an extremely important role in sustaining consumption demand as well as capital formation in small and medium industrial segment. NBFCs that are fundamentally sound should continue to get funding from banks and mutual funds without being unduly risk-averse. For purchase of high-rated pooled assets of financially sound NBFCs amounting to a total of 1 lakh crore rupees during the current financial year, government will provide one-time 6 months partial credit guarantee to public sector banks for the first loss of up to 10%. I shall read this again. For the purchase of high-rated pooled assets of financially sound NBFCs amounting to a total of 1 lakh crores of rupees during the current financial year, government will provide one-time 6 months partial credit guarantee to public sector banks for first loss up to 10%. Further, Reserve Bank of India is the regulator of the NBFCs. However, RBI has limited regulatory authority over NBFCs. Appropriate proposals for strengthening the regulatory authority of RBI over NBFCs are being placed in the finance bill. NBFCs which do public placement of debt have to maintain a debenture redemption reserve. And in addition, a special reserve as required by RBI has also to be maintained. To allow NBFCs to raise funds in public issues, the requirement of creating a DRR, that is a debenture redemption reserve, which is currently applicable for only public issues as private placements are exempt. This will be done away with. To bring more participants, especially NBFCs, not registered as NBFCs factor, on the TREDS platform, amendment in the Factoring Regulation Act 2011 is necessary, and steps will be taken to allow all NBFCs to directly participate on the TREDS platform. Efficient and conducive regulation of the housing sector is extremely important in our context. The National Housing Bank, besides being a refinancer and a lender, is also the regulator of the housing finance sector. This gives a somewhat conflicting and difficult mandate to the NHB. I am proposing to return the regulation authority over the housing finance sector from the NHB, National Housing Board, to the RBI. I am proposing to return the regulation authority over the housing finance sector from NHB to the RBI. Necessary proposals have been placed in the finance bill even for that. Government has announced